right away on the 15-minute, this is where we start. As you guys know, we've got this zone here. Cool. So we've got our midpoint. Let's get our midpoint out there. Essentially, we've taken this high. So what does that mean? That means that we're expecting to trade back into the zone. We've got our SNDR here that broke it. We've now liquidated it. Sideways overnight, slam down, cool. We would expect a retracement up, potentially into this area here or the high, which would give us our 15-minute delivery back down to the zone. So we've got essentially something like, stop it. Something like this, which would trade back in either to the midpoint here or which would align with this area here. Cool. Looks like we had a little bit of news the prior day. We've got this swing here, which I'm expecting to be, I mean, we've already tapped into it here. So if we're going to grind up right now, I'd be expecting, we've just swept this candle. We're now trading upwards, maybe a little bit of movement, and then we'll take this high. So when we're trying to look at this, what we're doing is we're suggesting we've taken this high, cool. Is this a valid high? Put it in the chat. Or do we expect this high to get taken today, possibly tomorrow, but likely today? As in, do we expect this to be high a day? No, we don't, right? No failure, nothing swept on our intermediate time frame. We expected at least something like this, which would provide some strength. And then if we get a vast or violent movement out of that, then we're looking for definitely trading lower. But we definitely need more to this. Cool. Everybody on the same page. Awesome. Right? So as you guys know, we don't just mark up everything. We've got a midpoint here, which might provide a bounce. But in reality, what I'm looking at is this area here, which we've just mitigated, or at least tapped into, providing a movement. Should we trade back down into it? In my opinion, that would have to happen really quickly, as in like something like this, which would then facilitate this. This whole area, the purpose of it isn't to necessarily deliver to this high. We would expect that to be a higher time frame area, which would likely be the midpoint here or a little bit lower. We can take these scalps as we're delivering lower, right? So we would expect some sort of lethargic movement, which would lead to rejection, which would then take the high. So this actually looks pretty clean so far. But what I'm looking at is at some point in this movement, I'm expecting the 15-minute to then trade back up to then get short, because I want it to trade back down to here. And that's how I expect it to deliver. Okay. So staying out of trouble is we're not looking long in here. You have your sweep here to take you back up with the understanding that this is a retracement. We're not going long here expecting this high, which is very important, right? We're looking for an intermediate to higher time frame retracement, at least a few legs down. And that gives us context, because then we're staying out of trouble, not long for this move or taking a long here, getting stopped, taking a long here, getting stopped, you know, maybe making some money on a long here, potentially getting stopped, whatever. So let's zoom this forward a little bit. We'll go to about 8:30. Come on. I should really have only done this like one day. 8:06. We'll just zoom it forward a little bit more. Okay. So what do we have? This long, this sweep failure. Cool. Beautiful. How on point are we so far? We got our movement here. It took this high. We've got our internal movement here leading to what? Rejection, right? So what's our expectation of this high here? We expect this high to deliver below here. We've now got our change in order flow. We're not getting major movement here. So essentially what we're monitoring now is this internal movement here, if this trades above this or not, which is also very viable, right? So I'm not looking long at all here. The short was here. I'm definitely not looking short in this. But you can also see there was our sweep failure in here. We traded below, we traded above, and then we traded below. Personally, this was the area I'd be looking in, but I'm not seeing anything really conclusive for failure in here. This, however, would have been something I would have been interested in. After we had our failure delivery, we now traded back in and we've got a sweep. But let's zoom this forward. We'll go to 1030 and then we'll play a little bit. Right? So our expectation, we've got this area below us. Cool. In this area here. So this is right here. Those of you guys in premium understand that if this area breaks, we trade back down to here. Right? So we're not looking to long in this. We might get a long in here, just below it. But we would expect, what is this, 60 to call it 30? No bueno. I would need something probably in like the low 20s or so. Maybe even that low there. Okay, so let's stop this for a second. So we've got 855, strong movement down the 15-minute, cool. We've got this area of interest, okay. We've now taken this low, closure below it. So our 15-minute is delivering. We've got this right now. Confirmed. Morning, Ziggy. All right, our expectation right now, this is still a scalp. We could trade higher. And should we see failure in this area, then we trade lower still. So why is that important? It's important because if we're looking at this from a candle perspective, sweeping below here, cool. Right? So candles alone, we would expect to trade back up to this, wouldn't we? But when would that fail? When would this not deliver to that high? Who's awake? Getting there. So if the 1 minute, say this is a 1 minute, and this 1 minute trades higher into say an imbalance and then fails. This 1 minute isn't going to deliver based off of candles because the 15 minute has failed and has an objective. Right? So we always have to take these sweeps into context of the higher time frame above it. Right? So this is good for a scalp. We've now closed below. We now traded below it, traded through. This scalp would have provided 15 or 20 points. Great. Fully get on board with that if that's your risk appetite. But we have to understand as well, we have this high, this low, this high, this low. How many swings? Right? Why is that important? It's important because we expect this low to get taken. Because our higher time frame should deliver a minimum of how many retracements down. Right? If this was our third or fourth, now we can have high conviction that this is going to go higher. But our higher time frame is still delivering lower. Right? So this is good for a scalp. Awesome. But I'm nervous with this taking this high, or at least trading to here, because I'm still expecting us to be in the early stages of what's going on. I love the location inside of an SNDR. We've now got a sweep. We've now got failure. But we need to be cautious. And for those reasons. So let's see how this delivers. And if I get wrecked, right? When in doubt, if you're staying out, cool. If we're wrong and we get like a massive break and then trades back in, we find strength, then we take this long. I don't need to be in here for this move. That to me is low probability. Okay, strong so far, cool. I'm going to speed this up to 20 times. What are you guys thinking? Are we long right now from the SNDR to take this high? Or this one at least, not part of structure? Not for me. Let's actually switch this down to 1 minute, and we'll see if we get. So here's our 1 minute chart. Okay. So this was the trade that got swept back into the midpoint of this. Cool. We've got some internal structure forming here. Is this what we want to see? To take this high? Why not? Leading to rejection. That's right. We want this to be gone, don't we? Finished business, places to go. We'll slow it down once we hit 930. That's not good, is it? We've now got a bit of a change in order flow coming in here. You could argue first, confirm second, maybe a third push up. But this is starting to get nervous for me. This is a potential area to look short. $9.28. Boom. And let's slow it down for our 9.30 fun. We'll go 10, 2, 1. Right? So zooming out, we've got our 15-minute confirmed. We're now trading back in. Should we trade below this low? This is not sweep model, because we have higher time frame delivery where we've now just finalized our retracement. We expect this area to get taken. Okay. Let's see what we got. Especially at 9:30. So this is where we stay out of trouble. Trade back up into the midpoint of that range. Cool. Hopefully we weren't stopped out there. If you guys were looking for something super aggressive, not my style. Okay. So when you guys are looking, and Friday was or actually last week was very good, wasn't it? We had just strong movement down and no reason to consider the low being in. None. This is delivering strongly. So we're not looking to take just, oh, well, this looks like a good spot or whatever. Right? Wait for strong buying pressure and then failure, or at the minimum, some internal swing to risk off of. Right? Wait for something concrete. There's only a few things that would allow us to get involved for a high probability long. What we want to avoid is going long, stopped, long, stopped, long, stopped, long, stopped, and then we miss, say it's here, the big move, because now we're death from a million paper cuts, because we're not patient enough to wait for that signature and price that we backtest and we study. Right? We don't need to be early, but you do need to wait for something specific. See what we got. So what's our expectation right now? Our expectation is a new low. No. You could for a scalp, I suppose, if you're very aggressive, right? I'm expecting it to go at a minimum here, potentially below. We've got this higher time frame area that we haven't really traded into. This is one 15-minute candle. So I don't want to get short and then get caught in something that's delivering up here in the higher time frame. For me, the short is somewhere in the change of order flow here or the retracement. And I leave all this. Right? We don't want to be looking for every 10 points. I'm stalking along right now. And I'll take a few of these if it delivers. So in general, what I look for is deep retracement and reason to go higher. I'm looking long. Spiking up like this and reason to go lower, I'm looking short. Because 80% of days are mean reversion. And then what your next step is, when do we stay out of trouble with these infinite bid or infinite sell days? And that kind of comes into candlestick theory as well, where we're getting that 15-minute failure and it's not even delivering to the 15-minute open. Then we know that it's your higher time frame that's just shoving us down. That plus our SMDR theory keeps us on the right side, or at least out of trouble. Which you'll find is the biggest function of consistency, when to stay out of the market. We're seeing these little movements here, right? So there's a potential long that came in there. Awesome. We're still 9 minutes into the morning. We got our midpoint here. This could deliver. Let's see what we get here. Right? This is nice failure coming in here. We'll see if it generates anything. I want to see where this open of this 15-minute candle is. This is the midpoint. We're seeing that it's getting chopped. We've got the high of, actually, this is the higher time frame midpoint, isn't it? So you could have looked for a scalp in here at a minimum back up, but I'm waiting for the 15-minute candle here. There's actually a pretty good long scalp in there as well. Right? So here's your pullback. What are you guys thinking? Is this still a short? Are we still expecting a little bit higher for short? What exactly are we delivering and doing right now? Third swing, okay. Little higher to fall. So we're stalking a little bit short for at least the retracement back down to this. Okay. Okay. So if we zoom out, we are at our midpoint, aren't we? We've just swept. Cool. A little higher than short. Okay. I can get on board with that. We've got this beautiful area in here that would likely give us something. Second sweep of the theme balance. Okay. As long as we know exactly what we're looking for. Let's see if we get something. That's beautiful. Right? Potential short area into that. I'm nervous about this imbalance. If it's respected and we sweep above this, that would get me short. Right now, it looks like it's delivering nicely. Right. And the only reason to suggest that is because of the failure here. Let's see what this delivers us. So disrespect to this imbalance. Cool. Okay, so let's pause this here for 1 second. We've got a few different things at play here, don't we? Our 15-minute candle is about to close, which is important, right? Say our 15-minute candle closes here. This is what we're looking at. So strong movement down inside of the midpoint, right? Say it closes here and we trade lower and then we trade through. This is exactly what we're looking for. Inside of a midpoint, so we got confluence, awesome. Right? And then we can look for lower time frame movement. And how nice of a high is that at 9:30? Right? So let's see. We got 10 seconds. Spotty internet or something? What else do we have in play here on the 1 minute chart? Okay. So here's a few different things. Should we take a long in here? Where's our target? First off, should we even consider a long here? Okay. If not, why not? We have a sweep of a 1 minute candle. We've got this low here. We haven't yet traded back into the prior range. That's right. So our 15-minute candle has opened here. The 1 minute, like this is a good reaction. We're happy with that. But we want this 15-minute ideally to run this low. For the same reason that we got decent movement here, decent movement here, right? So should this 1 minute provide an opportunity, it is just trading higher, ideally this imbalance, to then go lower. So this is an advanced trade. I'll take a short out of this, and if I get wrecked on this high, then I get wrecked on this high. But I'm looking short into here to take this low to then get long. So when you guys kind of see me taking a lot of trades through the day, I'm doing things like this, right? I'm short to get long, and I'm taking little sort of movements as I expect things to deliver. What you guys should be looking for, however, is that bread and butter failure, say here, and then rocket ship. That's high confluence. If I was starting again, this is what I would be doing. So let's see if we get something. My fingers on the trigger, I'm looking at this SMDR. If it trades up, it may very well not. I'm expecting to deliver to 75 at minimum because of this. Slow it down so we can see the order flow. 72, come on. 74. If it comes through this open, I have to take it at 69. Okay. Is what it is. And we'll go here. We'll see if we get delivery. I don't really want my stop above that candle. Just gonna move it slightly. And we'll zoom this out. Actually, let's put that above there. Took that high, great. Body closure, am I about to get wrecked or what? Right? So almost 950. Here we go. Yeah, let's slow it down. Target filled. Thank you. Okay. Now, this is below our 15-minute low. Awesome. Now what do we have? Right? We need lower time frame confirmation. Did we have any lower time frame confirmation yet? No. Right? So ideally what we get here is we get this failure, which would be an aggressive entry, giving us 1 minute confluence of the 15-minute price action. But a safer way would be trading back to the 15-minute open and then waiting for some sort of failure to come in here for confirmation. So what we'll do is if we get something like this, we'll take our long entry on this sweep if this fails. And if we get wrecked, we get wrecked, right? We've liquidated this area here. Cool, right? Looks like we've liquidated this area as well, which was kind of the SMDR inside of this zone. So if we sweep here, we might trade back into this, but that's highly unlikely. Looks like we've already dealt with this zone. So I would have high conviction in a long from this area here, not to the point of blindly longing it, of course, but what we're looking at is if we get 1 minute failure in 14 seconds here, then that might be an aggressive entry that I would take, depending on what goes on here. 4. Okay, looks like we're probably not getting our sweep. We'll wait for confirmation for our 15-minute. Zoom it forward. And by the way, this is when you get strong movement like this, and we're looking on the 1 minute for failure. This is when we might not get it. Also, when you see us ape in sometimes. So if this trades back through the open, well, let's actually wait for more confirmation. This couldn't sweep it down. Right? And what else do we have? Accumulation, manipulation, trading up, failing, bang, bang. Right? With the possibility of breaking this high, which is now protected. Breaking this, trading back in, gone. So those of you guys, some of you guys are sending me messages, which is cool, where you're learning forecasting. How would we expect the 1 minute to deliver based off of what the 15-minute needs to do? Where would we expect this low to go? It would be above this high. Right? So above here, we've now broken structure. If we trade back in, this will be a high conviction long for here. Why? Because we've now broken structure. We expect the 15-minute to have a change in order flow here, or sorry, the 1 minute to facilitate the 15 movement back down. Sure. First off, let's look at this. The entry was actually at 51. We might have missed it, but do that annotation. So let's say we're in from here, right? It's clearly drawing. So, right. So why here? We're looking for 1 minute failure. Why? Because we've now traded back on our 15. We've now traded back into here. So ideally, we trade up to 61, which would be our 15-minute entry. Now, I don't know if you guys actually want to trade with a 30-point stop. I personally don't. But what you're doing is you're looking at failure here is our 15-minute sweep. We then expect to trade up to this. And the 1 minute should deliver into here based off of that. And you might argue, but we have a 15-minute imbalance. Is that significant? No. Why? Why is the 15-minute imbalance not expected to put in a new low? Objective met. Higher time frame. If we move out of here, that's a higher time frame area of interest. So now we've got this, right? And then a change in order flow that occurs in here would drive higher. So where's our final target? That high. Clear as mud? Does everybody can understand? Right? So getting less mud, cool. This is why we look at, for starters, you guys know I don't trade off of imbalances. I respect their power, but many imbalances have inversion plays on them. So obviously, just from that alone, we know not every imbalance is meant for a rocket ship, either up or down. Similarly, not every SNDR is just blindly longed into. Some of them are meant to be liquidated. Same thing applies to imbalances, right? But you'll also notice that we can be very, very precise with our entry, right? But if we're in at 54 or 51 or whatever, it's much less important than actually understanding the weather conditions that we're in. Because right now we're buying on major bearish strength, aren't we? Let's see if we get wrecked. How many people, and be honest in here as well, it's perfectly valid at everyone's point in time in their journey. If we trade back into here, who's looking short? Midpoint of a zone, bearish trend. Be honest. Is that a valid short? It would be if you're only following 1 minute structure, right? You've got your zone here. We've just delivered and broken a new low, right? Let's keep playing, right? The reason we're not looking short, even with that, is because we are inside of a higher time frame midpoint. Let's actually move that. Because if we're right, we're going to take this high. If we're wrong, we get wrecked. Right now, I'm seeing 1 minute confirmation. Awesome. Yes, we're failing in here. I don't put much into these second imbalances, as you guys know. I look for imbalances to be unfinished business and done. Oh, sure. Bar timer. Okay. Yes. So good question coming in from Goldbeard. Love it. How aggressive is this entry here? Very aggressive, right? Because we are looking at this. If this 15-minute fails, we now have a weak 15-minute candle. Right? Which is what this trade is predicated on. So in order for the 15-minute to deliver higher, we need a change in order flow to occur on the 1 minute. So there's two areas that we're going to look long here. One of them is very aggressive, where we're expecting, and this could very well deliver from here up to that candle. We are at the time of the day where if we get volatility, it could go on a rocket ship. Right? That's not our expectation. If that happens, then we miss out on a bunch of points. And I'm fine with that. Right? My payouts come from getting 10, 15, 20, 30 points consistently rather than one 90-point banger and a bunch of losses. So if we're right, our expectation is that we've got this movement down, we've got this low, this high, this low. If we break it, we then trade back in. This is your break in structure confirmation long where you're now looking for a swing. This is a much safer entry. This is a 1 minute to take it here. I'm not looking short, but that's possible. Right? I'm looking for the long to break structure based off of 15-minute candlesticks. And then the confirmation entry as well. So if we're right, I'll take both. If I'm wrong here, then I'll wait. This should be down in here off of this failure. At the minimum, it should be on the close of that candle at 51. And the only reason for this long is because I'm seeing 1 minute failure to support my idea of the 15-minute inside of a higher time frame zone. So structure, narrative, and then failure. How aggressive would you be on your stop? Probably pretty aggressive. I don't want to see it come below this. So I would have about a 3-point stop right now. I wouldn't put it break even because it can mess around in here. But in my opinion, we're already done here and we're showing failure. This should continue. And you'll notice as well, we've got no structure here. At minimum, we should take this high at 80. How quickly? Right? Why? Why so quick? If we're right. And this is the key. This is the key. When we're getting involved in high volatile trades where we're right immediately. If we're right, we get explosive movement. And actually, how did that 87.50, 87? I don't know how that actually filled us, but yeah, that's weird. Yeah, like on backtesting, why can't that happen in real life markets? Real life market, it's like my target's like one tick above and it hits like above and doesn't do anything. Like what the? It's probably going to deliver higher anyways. Maybe not. Depends if we get this movement. And it bears repeating that I'm not looking long in here right now. I'm expecting a movement back down to where? At minimum, back down to here. Weird how that coincides exactly with the midpoint of the higher time frame zone. Now, we don't have body closure here. 87.50, 87.50. So I would expect this high to go if we're right. But this is dangerous now, isn't it? Let's see where we get. Where are we expecting a bounce from? If it bounces at all, I'm not taking it. But where would we expect a bounce from? That open. Sorry, that close. 61.50. right there. See what we get. You'll notice that I'm not looking for confirmation longs just yet. I do need this broken. You will get to a point in your study where you don't need body closures, but I do need it broken. Anybody along? Or are we thinking this goes lower? If you're sitting on your hands, that's valid too. Right? There is no issue that I have if this delivers to here. We're still expecting that trade back in. Right? But this here is still the safer entry if we're going long, which I'm still thinking, because through all of this, all the sauce on the 1 minute that we get into, we forget we still have this up here, don't we? We've talked about 1,000,001 things. This is the prevailing narrative. So I implore you guys as well, remember to zoom out. Remember to zoom out. Beautiful sweep. Sweeping this structural candle. Those of you in premium know exactly what that is. Everybody seeing equal highs should run this low. Your ICT bros getting wrecked. Wait for it. My guess is we'll be waiting a little while. Let's zoom this forward. Is this clearing up some questions that you guys had on the last video? Look at how well we defended the 15-minute open. Good. So type it out. What are you guys seeing in this movement here? What do we see? Okay. What else do we see? What are we looking for on the 1 minute? Remember, this back testing is mainly for candles and staying out of trouble. Failing to go lower. Okay. Failing to take the high. Okay. Strong bearish response. Okay. Is it? What is the bearish response achieved? Right? We had this bullish candle here, swept below it. failure. So far, we've got this bullish candle here. We're sweeping below it, failing. You could argue this. Yes, Lisa mentioned that. That's awesome, right? Yes, we do have selling coming in here, which is keeping it sideways. This right here, that imbalance, is where we would be expecting failure and a rejection. This does this, we go below here. But it has to do it in here, right? Why is that important? Because if we take this high and then we break this fair value gap, are we then looking short? No, we've just broken structure. So it has to happen now. So we can look at and zoom in. Do we need to know exactly what's going on here to be profitable? No, but we're staying out of trouble if we were consider shorting into this by seeing what exactly is going on. That doesn't mean we would need to take the 5 or 10 or 20 points long here. We're still looking for something violent wherever that ends up being if we break structure. But we allow price to tell us when structure is broken. Look at that. Look at that. Who's been involved trying to short, and this just keeps happening? What happens next? Right? This is an arrogant trade, right? But you're seeing this. They are accumulating here right underneath the structural high. What does that look like? What are they creating here? Correct. This might be something you guys see. Just because it's not an A+ setup doesn't mean we throw everything out. If you guys are building accounts, is this the trade you want to be taking? Probably not. But pay me.
Target filled.
Thank you. Broken structure. Do we need a body closure here? Your probability increases with body closures. Right? How aggressive can we be, however? What do we got here? We still got this. Cool. Sweeping. I expect to trade a little bit lower than this. We've got our SNDR. We've just liquidated it. Swept it. Cool. Here's your scalp. I've only taken 2 trades here. I can see about 6. Right? Right now, you could argue short, probably back down below this low. Why? Not to mention, should we even be looking short? Could we make money? Yes. Right? For the majority of you, If you're working on your first payout or your consistency, you're not seeing this as part of a break in structure because we didn't have a body closure. Okay. I look at this as breaking structure. And the reason for that is because I'm putting it all together with everything else that's going on here. We've got our 15-minute open. We've swept below it, failed, and now I'm expecting to trade at the 15-minute high at minimum. We've got our high of day way over there that hasn't been finalized yet. We've now got a change in order flow above this high. I'm expecting to trade back in and go. Whether this is a higher time frame move or not, this would be the expectation, right? Where we just get a rocket ship after it trades below here, ideally sweeping this low into this area. Why are we expecting the origin? We just broke the S&DR. This is a viable long. I'm sure Ty is eyeing that. That's awesome. That's your scalp. But it is a scalp because we're expecting this. So this is your multi-time frame analysis coming in. Am I going too fast, or does everybody kind of understand? Or would it be better if we just looked for longs for prevailing narrative of the 15-minute candle? Yes. Right? We can only look for longs. That is perfectly viable. Understanding when the shorts have the ball keeps you out of trouble on the long side. We all understand that concept. So if we expect retracement, that saves us from going long in here, risking off of this, getting wrecked, trading back up, going long here, getting wrecked underneath. And then potentially finally, wherever that ends up being, whether it's a 55 or 50 or 45 or 65, we then look for this. And this is your confirmation long on your 1 minute. Because you have lower time frame break of structure. Why are we looking for lower time frame break of structure? Because we understand that market structure does this, and the 15-minute does this, and goes, signaling a higher time frame move up. And inside of this, you have a 1 minute change in order flow here, 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 a 1 minute change in order flow here. All of which are facilitating what the 15-minute needs to do to go. So if we know that this is a possible short, whether we take it or not, that keeps us from going long here, doesn't it? And believe me, the market is going to entice everybody here to go long. Quite often, what do we see? We see a violent bullish candle, which then gets destroyed. Weird. Who could have predicted this? And then what happens? Just like the longs, how violent is the bearish move going to be into here? Violent. Right? So possible long here to this. I'm expecting another move down. right? We're in our area. That was a possible long. Let's actually stop this for a sec. I'm doing a little bit too much talking. Where are we looking long? Right? You've got this open here. That's your ICT Bros order block. Right? What is that open? 55.25? That's viable. I'm not liking that we didn't get a sweep in here. We swept this low. Cool. Yeah, that's another possibility. We get a change in order flow that goes on. That would also be cool. For me, sweeping this low now, ideally we sweep this one, 48.50, would give me cause to go long. Confirmation would be at a premium. And you would probably see that 2 or 3 out of every 10 trades. Because if this long takes off, is it part of the 1 minute that's going to take off? Or the 15-minute that's going to take off? Or is it going to be a higher time frame move? It's going to be a higher time frame move out of a higher time frame zone. So let's look at this. This is confirmation now, so I'm increasing my size. Remember, we're at our 15-minute open now. Whoop. Okay. Key area of interest, expecting at least a little bit of a bounce out of it. Doesn't mean I take it short, but how many swings? I need one more. Sweeping above this candle should take this low. Right back to the open. Okay, there goes the low. Slow this down. What are we looking for? We got 5 seconds. Ideally, what do we get? Oh God, don't do that to me. Don't do that to me. So again, looking at 48.50. Oh dear. Sweeping. Yeah. Okay. Gotta go. Gotta go. Stop below there. Now, this could be viable to take into this range here. So I'll ask you guys, would you rather me walk this through for a swing and then get out wherever we see failure? Or should we scalp our way up and trade it that way? Swing to failure? Okay. Then let's move this. Let's move this. Let's put it here for now, and we'll see if we get failure. All right, what are we looking at? 70. Okay. Then I'm not going to play it at one time because we'll be here for forever. Let's swing it. Failure here. Cool. I need confirmation through this. If I'm right about market structure shifting, this high should be our target. And then we trade back in. But I'm expecting violent because this should be a higher time frame area out of here. Or at least a 15-minute time frame out of here. Take one off at the high. Yep, absolutely. How many points is that? We're looking at what? 30 points? Cool. Zoom this a little bit more. Right? So what we're looking at here, failing above, trading back to the open. So far, good response. We're looking at this 1 minute delivering and now failure. So I'm willing to give this a little bit of time because this is telling me the 15-minute doesn't want to go any down or down any further. And now I'm expecting this delivery on the lower time frame. Right? This is a little bit more lethargic than I would expect. I would expect acceleration away from here. So that tells me that we're likely not getting a barbecue. And because this is a swing, I'm not putting my stop to break even. Is this making sense to everybody? And now what do we see on our 15-minute? Very good defense of the open. Swept, failed inside of a confluence area. Very likely that we trade back up into this at minimum. Right? That low there, 875. That could be your day. That could be your life changing with this sort of price action. One and done. Right? So we've got this high here, 90.75. That's our next internal high, which would then create a protected low. Bang. Right back up into our zone. Cool. Do we expect a reaction to this? Yes. What do I need to see to get out? Notice how we're not looking at this. We don't care. Right? We also don't need to be involved in a trade that just goes for 200 points in order to feel good about ourselves. We understand that this should trade back in, ideally to here, right? And then if we see failure going in, now we can look to get out because that's where we're wrong. If we want to trade below this low, which I'm not expecting. But we have to be prepared for being wrong. Right? So we've got this candle. 815.25 is our candle range expectation at minimum. Unless we have higher time frame issue. Right? So we're failing here now. We expect to now trade back in. Lower time frame facilitating 15-minute back in. I'm going to mark this area up. Probably here, if I'm honest. We'll mark that area. Let's get rid of this now. If I'm fully transparent, I definitely would have taken it off trading back into that zone. Right? This will likely offer another opportunity, especially if we get like this is an adding opportunity in here to now take that. We want to ideally a body closure above that candle. There we go. Bang, bang, get going. Everybody short is throwing their computer out the window. And what do we get? We're continuing to see what? Price delivery. Failing where? Right? Not sweeping this, sweeping them below it. Right? And you see the opposite as we deliver lower. We're sweeping above it. We're not sweeping below it. Right? What does that look like? Looks like the high. Right? All time frames, all the time. Shorts are about to get wrecked here. Almost like we're building what? Right below what? Who picked this day? This is a beautiful price delivery day. Higher time from SMDR. Okay. Every day is beautiful. Yeah, that's true. It's true. Market doesn't change. Our interpretation of it can be off at times. It's not like price takes a holiday. Look at them playing with their food. Look at them playing with their food, eh? Oh. Now what? Back in we go. Ideally. Does that mean we short? No. Right? Why is this area still important? Because it was our SNDR of our 15-minute time frame. Right? And you guys will remember first time. Should we fail here? Then what happens? Let's speed it up a little bit. Unless you guys are actually looking at taking longs and shorts into this. I'll pass. But I will add if we get failure, ideally below this low, 77, or sweep of the SNDR is also viable. In this case, when I do this and I add, I definitely take some off here if I'm right. I de-risk as quick as possible. But I also get very aggressive on my stop. So spike down, closure underneath this, cool. Failing above. This is the predominant piece of price action where I got this closure, which means we're not looking long in here, even for a scalp. Just bears repeating. Hopefully nobody is. But in the heat of the day with everything else going on, we're starting to get our move now. Cool. Let's zoom it down. Right. What do we got here? 77. Did that just do it? No, it didn't. That was quick. Mercy. Come on now. Don't actually double bottom us. Hmm. Patience. Patience. And gotta go. Right. We'll take 2 off pretty quickly if we're right. And if we're wrong, then we'll exit part of our position in this. And you'll notice we've mitigated the midpoint of this zone as well now, finally. If this trades above this candle, I move my stop to here. Of this candle, sorry, 92. Yeah, I mean, this is just market structure 101, right? Okay, there we go. Awesome. Awesome, awesome, right? We've got this area here, cool. Actually, didn't even quite hit the midpoint of that, did it? Wild. Right. So if we start getting failure, then I can start moving my stops. Okay. As soon as we trade above this, ideally, I don't want it to come below here now, 85. And we're just going to follow this up now. This is where I expect violence. We've got nothing left to be done down here now. So when you're looking at narrative, you're looking at objectives. And if we have no objectives lower, oh, baby. I'm just going to walk it up. Walk it up until it proves us wrong. Right? If we start sweeping below or above candles, then we expect lower prices. Right? So for example, here, I'm a little cautious of this. If this gets taken, then this low is actually in jeopardy. So I expect well defended. We'll just see how this delivers. Okay. Out of the woods, looking for this high at minimum, 809s. You could, absolutely, you could. I was going to swing for you guys just based off of failure alone, but I like de-risking. I actually would have taken 2 off here. Right? And then put my stop here and then let it run up. But you absolutely could take 2 off here as well. I'm just moving my stops. Right. This is now higher time frame delivery. We don't have any lethargic movement that's going to trade back in. This is just running. Yeah. You and I both. Although there's been some really nice swings lately with some of the price action. Right. So I'm looking, if we sweep and fail, then we could trade back below to here. Sure. Right. We're just walking this up. There's your 15-minute. So we've just taken the 15-minute high. Perfectly viable to have this be the trade. I mean, ideally, we're down from in here, but care about 6 points, right? So all of this was predicated upon this trade to here. All of it. And you could even argue that this shouldn't even be there. This should be like here or even higher. All are viable. All are viable. ATM strategy. What's the ATM strategy? Ooh, that's violent. We haven't swept that high, so I don't see anything. The one I see on your screen on the right. Oh, this is just. I typically take, when I'm scalping, I take 10 and risk 10. So like this is just right. So my old passing for evaluations, when I take 5 points, 10 points, 20 points. right? So this is risking 20 to make 20, risking 10 to make 10, risking 5 to make 5. And then I don't even know what our backtesting is. What is the backtesting? Right. What is? Oh, okay. So that's like a make 50 to risk 20. Okay. That's interesting. I don't know when we made that, but we must have made it one of our other ones. Right. So we've now taken this structural high. Cool. But if you guys are looking short, you better not. Right. So, but going back to the question, Goldbeard, the biggest things, the multi-time frame analysis video that we did is available to the public, and that one is, man, if you understand that video, you're going to be just fine without the mentorship, right? Like the mentorship kind of goes into candle ranges and walkthrough of price expectations and different models of getting involved, but in reality, that stuff is that's kind of refinement and increasing your probabilities and whatnot, right? The MTA is that's the sauce right there, and we gave that to the public. So let's walk through this, and then we'll let you guys have your Sunday, and I'll run out of here for our anniversary. So we're looking down here for this trade here because it aligns with our higher time frame area, which we understand that this area is where reversals come from. Higher time frame reversals. Big ones, right? That reversal isn't going to come from here because it's not a higher time frame point of interest. So what we're doing is we're monitoring how we're trading into here. Are we running down to take liquidity? Is this going to break this high over here? Probably not. Exactly. Right? You could have even argued this, but in reality, we're looking to trade back down here anyway. So we don't really know where this short's going to go. So staying out of trouble here was probably one of the bigger analysis points that were important today. Regardless of getting involved, it's when to stay out. That's the key. Right? So then we're looking at how this is going to deliver. And through your guys' study, you'll see things like this quite often. Why are we looking for a long here aggressively? Because we had this. Which is counterintuitive, isn't it? And also why only 4% of people get payouts. The 4% are looking for longs in here. Because look how much buying took place in here. That doesn't mean this is the only way of trading this move. How many different areas of interest are there inside of this movement? There's lots. This trade here, this trade here, this trade here, this trade here. We don't need to be in at the bottom. That might not be your risk appetite. That's cool. I personally don't care whereabouts you look long. Some of you guys might have been in here. Right? Some of you guys might have longed here or like after this on this pullback and your stops below here. I mean, they would have made money too. Who's to say that's not the right way of doing things? I just prefer having or viewing the market as a curve And if I'm long, I want to be long when the market switches long. I don't want to be long here, and God knows how much drawdown this is going to be before proving my ego right. I don't need to be early. But if my narrative's right and I'm in at a decent spot and I allow the market to do its thing, I'm going to get a payout, which I do. Right? So learn when to stay out of trouble. But more importantly, view these and study these movements as a curve. You've got your long, you've now got, right? You can even argue this. And then you're looking at this as a curve, which then trades to here. Do we want to be long in this? Probably not. It's not much better to be long on this side of it for this movement. How do you denote when you're on the right side of the curve? It happens on every time frame. Starts with an F. Rhymes with failure. Right? So zoom out. Yes, this might have been a little challenging for many, but we're looking at higher time frame context. Higher time frame context. Happy Sunday, and I'll see you guys in the room tomorrow. And thank you for spending your Sunday with us. Hopefully this was informative. Zoom does the automatic recording, so I'll get that posted, and that'll be available to all you guys too. Cheers. Enjoy the rest of your weekend and trade safe this week.